Ladies and gentlemen, money is printed and created through debt. And so when the cost of debt goes down, more money is created, more money is printed, and more money flows into assets. This is why the Federal Reserve cutting interest rates is excellent for financial markets and bolsters potential bull runs across financial markets. So when we see the inflation data come in slightly higher than expected at 3% instead of what was considered to be the consensus at 2.9%, that makes the Federal Reserve less willing to cut interest rates. And so we get a situation in which the market is not expecting interest rates to be cut for much longer than previously expected, and hence the new funneling through of money into financial markets is not really a narrative that's driving the buying pressure. This is, in my opinion, why we've seen such a long consolidation here, because nothing bearish has happened, right? The inflation being higher than expected and the Federal Reserve not cutting interest rates is not actually bearish because they're not raising interest rates either. It's just not immediately bullish because they're delaying when the cuts are going to occur, and hence they're delaying when the new money is going to flood into the market. So this consolidation we're seeing is literally the charts telling us, the charts translating investor sentiment, which is we are just waiting for something to happen. That is what the investors are saying right now. There's no clear bearish strength. There's also no clear immediate term bullish strength. We're still in the macro upwards trend, so there's still a macro bull market in play, but we're waiting for the next catalyst. And that catalyst can come through TA. It doesn't have to come through news. It doesn't have to come through macroeconomic data. Oftentimes it does, but it certainly doesn't have to. What's bothering me about the cryptocurrency space right now in wake of the recent news in regards to interest rates and inflation is there seems to be this idea that a bull run cannot occur unless there is money printing. And that's just simply not true. We'll look into that today. Other things we will look at is the Bitcoin macro range itself and the levels that need to hold, the levels that need to break, a very, very important retest of a line stemming backwards from 2011. And the state of charts like the USDT.d chart and the DXY, which are very often overlooked in the cryptocurrency space. Before we get into it today, guys, check out the Bitfinex and BitGet exchanges. These are very good exchanges. I reached out to them for partnership. They did not reach out to me. They didn't pay me any money. I don't get paid by them. All I get is a referral link. If you use that referral link down below to sign up to either of these exchanges, you get a 15% trading fee discount attached to your account for life. That's a very, very good deal there. On top of that, you're getting up to 5,500 USDT in rewards on Bitfinex and up to 6,200 on BitGet. Now, why would you choose these exchanges? Well, Bitfinex is global non-KYC. It has never been hacked before. It's got hundreds of trading pairs. It's a very good all-around exchange, globally speaking. So sign up with the link below if you're interested. And BitGet is top 5 trading volume. So a very reputable and well-known exchange with very, very few liquidity issues. You cannot sign up from the USA, but everywhere else should be fine. So take your picks down below, Bitfinex or BitGet. The links are down there for the 15% trading fee discounts. Appreciate that, guys. You probably won't regret it. Just off the bat here, let's make something exceptionally clear. There is a massive misconception, or at least in my view, what seems like a huge misconception about how interest rates actually affect Bitcoin. A lot of people seem to think that we need to be in quantitative easing in order to see a Bitcoin bull market, and it's simply not true. In fact, the 2017 bull market, the most parabolic bull market, in a lot of ways, the first proper altcoin season Bitcoin and cryptocurrency ever saw occurred during quantitative tightening, during rates rising. Literally throughout the entirety of that bull market, rates were rising actively. There was 6 separate rate increases throughout the upwards trend that occurred there. So no, we don't need to be seeing quantitative easing for the markets to rise. That is simply not true, especially the cryptocurrency markets. But it's definitely a bonus, okay? You look at 2020, you'd be stupid to say that the quantitative easing in 2020 wasn't a bonus. Of course it was a bonus. The amount of new money that came into circulation that pumped assets was ridiculous, especially if you look at the S&P 500. You just see it clear as day. And of course, since 2020, where is it? It's all the way back here. It's a long time ago now. There's that influx of new capital into the economy that just stimulated the markets into a permanent uptrend for basically almost 2 years. Okay, that was directly due to printing, and some of those effects brushed off on Bitcoin, that's for sure. And as Bitcoin connects more and more to traditional markets, as institutions get more and more involved in cryptocurrency, yes, it does become certainly true that quantitative easing helps, but it's not like it's a cyclical necessity. So I think there's this misconception just based on what happened in 2021 that cryptocurrency needs quantitative easing and needs printing for it to rise. It's actually just not true. So that's a misconception cleared up. It would help, but it's not an absolute necessity. regardless of whether it will help or not, regardless of whether it's a necessity or not, the fact of the matter is it's occurring, okay? We've already seen 2 rate cuts, and yes, rate cuts have been delayed, and we're probably not likely to see them over the next couple of months, but they will come, right? And the rates will continue going downwards, so that's good. Just staying on the macroeconomy briefly here, there's not really too much else to discuss, but I'll quickly bring up USDT.d and the DXY. DXY, first and foremost, is the strength of the US dollar. We know that this chart is inversely correlated to Bitcoin. We know that for a fact. When this chart goes up, it's not good for Bitcoin. And we can just overlay the Bitcoin chart very briefly just to show you that here. So there's the Bitcoin chart. You can see when the DXY is in a downtrend, Bitcoin's in an uptrend. When the DXY is in an uptrend, Bitcoin's in a bear market. All right, so this chart going upwards is not good for Bitcoin. We are at a major point of contention here on the DXY, which is probably explaining a lot of the Bitcoin consolidation right now. The DXY has been in an uptrend since around October, and hence Bitcoin has been in a sideways move since around early November, right? It's not surprising. It's not a coincidence. This is how the markets work. Now, the DXY is seeing a potential resistance support flip on support. We really need to see that support breaking down. That will give Bitcoin the leadway it needs to move upwards. They are correlated, they are connected, okay, and we really don't want to be seeing the DXY bounce here in the same way we don't want to be seeing the USDT.d chart bounce here either. We don't want to see that break out of resistance. We're at a major resistance zone and at a reversal point, a turning point. Now, let's not, confuse and distort the situation too much here. It's not necessarily that the DXY going up causes Bitcoin to go down. It just goes hand in hand with Bitcoin going down. So if Bitcoin does go up, the DXY is likely to go down and vice versa. And if Bitcoin does go down, okay, the USDT.d chart is likely to go up. The fact that, and this is really the thing that matters, the fact that the DXY is on support and the USDT.d chart is on resistance means a decision is going to be happening soon, meaning Bitcoin will be moving and making that decision soon. That's the point that matters. So although we don't have traditional patterns of compression, like we don't have this triangle formation that's compressing to a certain deadline where Bitcoin's bound to move, we kind of have this broader range. Although we don't have that, we do have these alternative charts like the DXY and the USDT chart showing us they're at major levels, and therefore Bitcoin is actually in some sort of hidden compression here, and we should be seeing some sort of decision shortly. Now, it's hard to say exactly when, but I would expect it to be within this month. Moving into the Bitcoin macro structure, which is very, very important for you to understand, especially this line here, which I'll show you in just a moment. I'm going to show you the more immediate term consolidation we're seeing right here. It's not a horizontal consolidation. As I've mentioned many times in this YouTube channel before, we've had horizontal consolidations in the past, like this level here in 2023. We've had pattern-based consolidations in the past as well, like here last year we had this descending channel formation. This time it's not that at all. It's based on 2 diagonal lines stemming backwards from prior cycles, one of them from 2017 in orange and one of them from 2021 in yellow, cutting through major bull market highs on both occasions. And you can see those levels clearly acting as the range-based support and resistance zones right now, and therefore we need to be holding onto that support in order to maintain the range, and we need to be breaking that resistance in order to break out of the range and start our next macro leg. Now, we can further reinforce this by looking at this major trend line, probably the biggest trend line there ever has been on Bitcoin. In fact, almost certainly that stems all the way back to 2011, and you can see interactions with this line have been very influential throughout Bitcoin's price history. Just look at those interactions here on the 2-week chart. Very, very influential line. And what you can see is that we are on support on that line right now. It's sitting at around 91,000, and that lines up with the yellow level of macro support, which is sitting as well at about 91,000. So 91,000 is basically the level that Bitcoin needs to hold on tight to. As soon as we break below 91,000, that's when we start doing serious damage. Now, the bull market doesn't necessarily end if we break below 91,000, but serious damage is starting to be done at that point. So that would be very, very concerning, and hence that is the level we need to hold. So we don't really have that much downside room left on Bitcoin. Got about 5%, okay? We can go lower, as I said, and there's other levels we're looking at, like the weekly chart Gaussian channel, which is sitting in high 70Ks at this point. But really, I mean, if we're being serious here, breaking below 91K would just not be a good thing to do. We don't want to see that at all. We want to see Bitcoin breaking this to the upside very definitively here, especially after the length of consolidation we've seen. It would be a big disappointment to break down here and correct further, and that would resemble something like a double top formation as well, which would be quite concerning. Now, the reason I'm not immediately concerned about this being a double top formation is because we've seen this before. In fact, we saw it back here, come to mention, in 2023, a potential double top formation. We went back down to support. Everyone said we would break down. However, the cycle was stronger and we went upwards. We are still in the same 4-year cycle that led to that move upwards, and so it stands to reason that the cycle very well could be stronger again, and we very well could fake out a double top formation and break upwards, just like we did in 2023. Fingers crossed we do that. So to conclude, this yellow level here at 91,000 is the macro support. In orange at around 110,000 is the macro resistance. Unless either of those levels breaks, nothing really changes on Bitcoin in the medium and the long term. It's very much worth noting there is some sort of false truth here, this lie that's going around that Bitcoin needs a quantitative easing and money printing to go upwards. It's just not true. In 2017, we didn't see that at all. But it would certainly help. We're also seeing the USDT chart and the DXY chart showing that we're at a major kind of decision point here across the markets, and something is coming soon. We don't know exactly when, but probably, as I said, within this month. Thank you for watching, guys. I hope you enjoyed the video. Please leave a like, comment, and subscribe. Please, as well, if you're interested, check out the Bitunix and BitGet exchanges. I use these exchanges both personally, mainly Bitunix these days for trading. Very, very low trading fees on Bitunix. It's global, non-KYC, so you'll run into no issues with signing up, and you don't need to link your identity to the account. There's lots of benefits with that, of course. And then BitGet, which is a top 5 trading volume exchange, just very well known, reputable. It's been around for a long time. So they're both good in their own regards. Use the links down below to get a 15% trading fee discount for life, as well as thousands of dollars potentially in trading rewards just by using that link down below, getting access to them. And the last thing I'll mention here in this video is my VIP group on Telegram. I trade altcoins on VIP 4 times a week. You also get access to a group chat with 160 VIP members. So if you're interested in that, go ahead and check it out. Guys, thank you for watching. Hope you enjoyed. I'll catch you soon.